Imagine you could find an investment that works out something like this. You're able to go to the bank and borrow money at 2% and then go and invest it somewhere else and make 3%. Would you do it? Of course you would do it. And this is what has been going on with a lot of the funds that have been going to Japan. They've been borrowing money over there for close to 0%, and they've been doing it for years and years. And they have been exchanging those yen into dollars and making that investment here. As you know, the rates here are close to 5%. So they've been investing that money here while borrowing it over there. This for years has worked very, very well, especially because the yen has been devaluing. But that became a problem in Japan because with the yen devaluing so much, even the locals began to take their money out of the country and moving it overseas, where they were finding more stability and better investments for their dollar. As a result, the governor of the Bank of Japan, Mr. Ueda, decided to make a change, and on Friday he announced he was going to increase the borrowing rates in Japan. And this sent a ripple around the world because right about at the same time, on the same day, the United States published what they call their payroll jobs report, which is basically a measure of how unemployment is doing at the time in the country. That report came in quite weak. It indicated that unemployment has gone to 4.3%, which tells you that growth in the United States is not going to be that good for the next little bit. So what happens if you have borrowed money in yen and the rate that you have to pay for that is higher, and at the same time the expectations of growth of your investments are lower? You are going to unwind that investment, which is basically do the opposite. Sell all your investments here in North America, exchange your dollars back to yen, and then pay the bank back, close everything off, and walk away with your profits. The problem is everybody decided to do it at the same time, which is the equivalent of yelling fire in a crowded theater. So this caused a huge unwind. And the reason why this situation snowballed is because as every hour passed, more and more people were selling their assets, buying yen, and then going to the bank. By buying yen, they were effectively increasing the value of the yen. If everybody's buying yen, then the value of the yen will go up, which means your US dollar assets are now worth less than they were before until you exchange them into yen. So folks couldn't sell fast enough, and they couldn't exchange it fast enough because you don't want to be the last guy holding that big bag and losing all that money. That is what's causing the sell-off that we're seeing right now. And how big is it is very hard to tell because nobody really knows how many people borrowed money, how much they borrowed, how much did they overextend. And consider this, people from around the world were doing this. So it could be quite a while longer before we see the end of it. So what does that mean for your investments? Generally speaking, assets that you are holding, if they're high quality businesses, they're going to be fine. Think about it. If you own McDonald's or Costco or Walmart or any of those powerful businesses, today is just another business day. Business as usual. Profits will continue to come. And even if we see a recession, which is a possibility now that unemployment is higher, it's still fine. The businesses will be okay. Profits will continue to roll, and it's all fine. If you're a short-term trader or you're imminently needing some of that money, right now you'd be selling at a reduced price, giving up some of your profits. So As always, make sure your investments are high quality. Make sure you understand the long term. And if that is the case, by all means, this will become a buying opportunity at some point. It will be difficult to know exactly when is the ideal time to buy, but one of the important things is to let this play out first so that the unwind can complete. If it gets strong enough, we could be seeing some great stocks of good companies on sale because folks are being forced to sell. As I explained earlier, this has nothing to do with the quality of the assets that they were holding, nothing to do with the quality of the stocks. This was about a loan that is unwinding because it no longer makes sense to have.